to try and understand what do they think about this. Nimesh Chandan, Chief Investment Officer at Bajaj Finserv, with us in the studio. Nimesh, great day to have you. 25,000 historic moment. How do you feel and what do we do from here?
It's a fantastic journey for India, and I think this rally will continue. So we are in a bull market. While the celebrations are going on, I must also add that even the best of bull markets have corrections, and if people are trading on leverage or doing F&O kind of trades more, they become vulnerable to even the smallest correction that comes. So if you want to participate in this great India story, you must think longer term and pick up companies, themes where growth is not completely priced in yet. So I would say this is a good time to review the portfolios. I think as our house view, we have that we move from mid-cap, small caps towards large caps, from themes that have already done well in the last 3 to 5 years to some boring and ignored stocks. And so take some contrarian calls now and start looking at, say, the consumer side and the domestic side more than the international and the capex side.
Okay. So mutual funds have been sitting on cash. The average AMC was sitting on 7% cash. And let's face it, I mean, this rally's proved all the naysayers wrong. Are you deploying that cash now if you were sitting on cash, Nimesh? Because the market is just going one way.
So, frankly, we don't take cash calls.
You don't? Okay.
What we would, however, do is to move to areas where we still see a gap in terms of valuations, or after accounting for quality and growth in that sector, if we find some valuation gaps, we look at those. So it would be sector rotation and stock rotation rather than taking a cash call for us. We've not reached that kind of level, at least in the broad Nifty index, where a cash call is warranted.
Okay.
Nimesh, great to have you on the studio on an important day. And I think one question which a lot of investors, I think mutual fund investors, those in the cash market, etc., would be asking is it time to take some of those profits off the table? I think, if I'm not mistaken, I sensed a note of caution in your first answer as well, that even the strongest bull markets do see a correction. Are you anticipating one round the corner? Would you say this some time to take off the froth?
So most of the experts will say that the market's sentiment moves between greed and fear. And we are definitely towards greed. So we see patience going down. People are expecting returns that they've enjoyed in the last 2 years, similar returns to continue. I think some expectations on these returns need to be tempered, because we've already seen a very good re-rating for the Indian markets, especially in some themes, which are narrow themes. When everybody tries to get into them, there are only 10 to 12 stocks available in that theme, they go to overvaluation very quickly.
Yeah.
And they may be good companies, but the bridge between a good company and a good investment is valuation. So if you already paid the company for next 5 years of growth, then not much compounding is left for you, even if that company does extremely well. So you need to wait for a positive surprise then. So I believe that at this point of time, while we celebrate that we've touched 25,000 in Nifty, but we need to be a little more cautious in terms of now looking at valuations. In any market, you cannot say that this is the top. The top always fools you. And you will see some correction coming, but you can't time that correction.
Yeah.
So you can't predict, and as Howard Marks says, then you can prepare, where you start slowly moving into areas which are little less risk and have not seen the kind of valuation stretch that some of the areas have.
Vikas Khemani also joins in, founder of Carnelian Asset Management and Advisors, on this very exciting morning. Vikas, very good morning to you, and I think truly a good morning for everyone who has anything to do with the markets. 25,000 crossed. What next? Time to take some money off the table, little bit of caution, or you're saying that this is just the beginning? Can you hear me, Vikas? All right, I think we've lost that line. We'll try and get Vikas Khemani back and just get his view in as well. Nimesh, you spoke about now moving to areas which have not been stretched so far. I think briefly you mentioned consumption. Can we get into a little more detail of where these areas are? Because consumption-led stories saw a bit of a fillip after the budget. and then lost their sheen?
See, last 2 to 3 years, you've seen a subdued kind of performance from the consumer staples or some of the consumer discretionary. But there are green shoots or signals available that there is a pickup in growth in those areas. So naturally, the market would want to test a quarter or two to see how these companies perform. For long-term investors, this is the opportunity, right, where a sector or certain quality stocks have underperformed, but you're seeing some green shoots to pick them up. And it is better to position a little bit before the crowd comes in. So while the confirmation indicators will start coming in the next 2 quarters, the lead indicators are in place to say that we should look at consumption right now. And ultimately, job creation, the effort from the government in terms of spending, ultimately will lead to better consumption cycle.
Okay.
Right, we also have Vikas Khemani with us. Vikas, hi, good morning. Thanks for joining in on a pretty significant and fun morning. 25,000 on the index. Most people were calling it a top, maybe 2,000 points back. How do you feel at these levels? Do you feel like there's more room to go on the upside, or it's time to be a little more conservative and take money off the table?
Well, it depends on your time horizon. If you are a investor in India story for next 8-10 years, you just put and don't worry about these levels, because these levels beyond a point means nothing. It's just a number. But we've seen, every 1,000-point Nifty being celebrated for many years. So I think it's a good journey. And if your view is short term, I have no idea. But I believe that India is in one of the most transformation phase, and next 10 years is one of the best wealth creation cycle. There's a lot more money to be made from here, over the next 8-10 years. So the best for long-term investors to just stay put.
What are you buying, Vikas? I mean, it's a great market, you're right, and this comes in the midst of the earnings season, so largely seems like the street also is impressed with what earnings or what India Inc. is getting up to. What do you feel? Where is your biases? Where are you overexposed at this stage? What is it that you like? Anything that still looks very attractive to pick up?
I think, in every market there are good stories and ideas, and our India story does not change. We continue to remain bullish. Our investing philosophy does not change. Our bullishness on sectors like manufacturing, financials, consumption, services does not change. I think basically, India is one of the very few markets where there is so broad-based opportunity. You got to choose which are the management and companies you want to bet on. Widely, people will make money, but if you want to make slightly better money, you adjusted for the risk, and the key word is adjusted for the risk. Because in this market, risk is very easily forgotten, or risk is underplayed at this point in time. But that really comes in how do you factor that in, and so like at least we look at is that if I were to tell you one of our portfolios, earning growth over the next 2 years is 25%, ROE is about 18.5%, debt to equity is 0.1, and PEG ratio is around 1 times. So I think this kind of portfolio construction, when you have, at least it is adjusted for the risk. And I always tell people that in this market, don't chase returns, chase risks, or be careful of the risk. And of course, there will be, in every journey there are pockets of euphoria. And in this market also there are interesting plays available if your view is long term. Easy pickings have gone, but compounding story still remains in sectors I mentioned.
Vikas, hi. So, you talked about finding new pockets of space or investment over here. Just trying to understand if you're focusing more on the safer bets right now, the large caps, or are you feeling like this is a time to look at broader kind of stocks and sectors?
No, again, like I said, we really don't think in form of large caps and mid caps. We really think in terms of good business and run by good management team. I would, if I find a company or a business model run by good management, I would rather buy it small than buying it big. So we think on those terms. And of course, some pockets of small and mid caps have become very, very stretch and risky, which must be avoided. And I think it doesn't take a lot of brain to figure out what those pockets and are. But we are able to find opportunity in pharmaceutical space, chemical space. Financials have become reasonably attractive at this point in time again, and consumption, there are interesting plays available to look at. So I think each segments there are pockets available. We are fully invested. We have been fully invested, and we continue to remain. Our view has been always that markets are in a good trajectory. Don't waste time waiting for corrections. Many people have lost a lot of opportunity waiting for corrections over last 6 to 12 months, and people who see India with skepticism will keep missing this. Of course, someday correction will come. The correction comes at 25,000, 28,000, 26,000. I don't think anybody knows. And the factors like Fed rate softening stance on the Fed rate coming, I think it only gets better. The day, in my opinion, Fed starts cutting rate, we will have a deluge of flow towards India. It's already turning positive, and that will even further re-rate markets. So I think if you look at all those things, I don't see deep corrections in markets. Short-term corrections can come unplanned and unexpected anytime.
Vikas Khemani, such good words. Thank you so much for taking the time out and speaking to us. Really appreciate your time today.
Pleasure is always chatting with you guys.
That's the view from Carnelian Asset Managers. And he made one point which is valid, Nimesh. From nearly 22,500 odd, everybody is talking about caution being warranted. There is possibility of a correction. We've had 2,500 points on the Nifty after that. Yeah. Who knows whether the correction will come at 25 or 26K. So therefore, I know you mentioned you don't take cash calls. Is it prudent not to take cash calls, even if you're defensive? Maybe stay in defensive sectors, if you will, but might not be a good idea to sit on cash, waiting for the correction.
You are absolutely right. So, if you are sure about the India long-term growth story, and I think that most of the people are confident about, now there have been statements that this is India's decade, corporates are doing very well, balance sheets are still not, in India, corporate balance sheets are not leveraged, bank credit growth is just picking up. So, think better times are ahead for India. However, when market discounts these things very early, you have to start getting a little cautious about where everything is getting, all the good news is discounted. Because life doesn't go in a linear fashion, it goes in a cycle. And that's why there could be corrections that come in. And this is a typical bull market, right? As I said, if it doesn't fool you, it's not the top. It will fool you. According to our internal calculations, how we look at Nifty is not by a price to earning or a price to book ratio. We look at the intrinsic value. And we are close to that value. So we've always been saying that on fundamentals, we just don't look at one ratio to value the Nifty. So around 25,000 is where our number is also. So market is at reasonable valuation as far as the large caps are concerned. So we see still some upside there. So we don't want to take a cash call there. Can there be a time where the whole market moves into a bubble kind of a zone? At that time, maybe cash calls become warranted.
Are we there yet? You think we're in a bubble?
Not in the large cap. So in, say, mid caps, we are about 2 standard deviations away above their markets, average. Yeah. And in small caps, we are 1 standard deviation slightly above that average also. But not in large caps. So if I were to just simplistically put it, when we are choosing companies, if it's a basket of 100 balls in, say, the basket is a small cap basket, 20 are green and 80 are red. Not that all of them are expensive, but if you pick one at random, it's likely to be expensive.
And have you in the recent, and I know I read this about you, where you don't actually rejig your portfolio very frequently. You buy and hold and you don't sell often.
Absolutely.
Have you bought anything recently? Are you looking to buy anything recently?
So in our mega trends portfolio, which we run on the strategy we run in our flexi cap, we look at projecting long-term trends of 3 to 5 years and look at companies that benefit from there. Now, obviously, there is also a discipline to buy them at the right price. So there are many sectors, because the market is a bit impatient, whichever sector people need to wait for 1 or 2 quarters, they are trading cheap. So we look at those areas.
So you only got 2. What about chemical? Just a quick one on specialty chemical.
So
it's one sector that...
we've been early buyers in chemicals. Okay. Earlier with Neeraj, I've been talking on your show for a long time that chemicals is a trade to look at. And it has paid off well. Maybe not all the stocks, but some significant large ones have done very well. Pharmaceuticals is another area that we are very bullish about. Okay. Consumer staples is another area which I think will be low beta, but will be participating in the market. And banks, selectively banks and financial services.
Pharmaceuticals is also one theme which is coming up again and again. Thank you so much, Nimesh. Great to have you
Pleasure
in our studios on a very interesting day and an exciting morning.